play. A little bit more on the minor key, bluesy. Yeah, I like that. Anyway, we're back on the Educated Retirement Show here on KMET, the Mighty Met, and we have a very special guest with us. This time, Jon Daurio, and we will get into more of Jon in just not very long, really. And we'll let him introduce himself and then tell a little bit more. I mean, he is an attorney, so he's an esquire. Remember, he is a real live esquire, and but he also has a lot of knowledge and a lot of experience in lending law, the mortgage business in general, and in the past has owned some very varying, in case he gets shy, which I don't think I've ever known him to be, but he did own a fairly large mortgage company at one time, and is in the process, I believe, of getting another one right off the ground, and we'll do that. But let me just sign it over to Jon right now to say hello and give a little of his background.
Hi, Jay. Hello, everyone. My name is Jon Daurio. I appreciate the kind words, Jay. Yeah, I have a fairly extensive background in mortgage banking. Just quickly, educationally, I have a degree from Harvard in econometrics. Took a year off and worked on Wall Street as a muni bond underwriter. Then came out to California, went to USC and got my JD and my MBA. Practiced law with Latham & Watkins, then eventually opened my own firm. After that, I became general counsel for my largest client, which was Long Beach Savings and Loan. Long Beach Savings and Loan went through many iterations, became Long Beach Bank, Long Beach Mortgage Company, and then finally Ameriquest. But back in the late 80s, Long Beach, along with a couple of other Orange County-based lenders, were the originators of B and C lending. In those days, there were no credit scores, and so people were credit risked based on the alphabet A, B, C, and D, where A were great borrowers that could have loans sold to Fannie and Freddie. D were people that went to hard money lenders that lent just based on the value of the home. B and C was that middle part, and the B and C industry flourished. In 1998, I left the Long Beach family of companies to form my first company, LFC. From there, I formed 4 more mortgage banking entities, one of which was Encore Credit, which became one of the nation's largest subprime wholesale companies. And then a company that still thrives today, Condor Capital, which I founded and was the chairman and CEO and helped build it, that is still the premier buyer and manager of non-performing loans. You mentioned I'm in the process of forming Nickel Home Loans. Nickel is spelled funny. It's Nikkael, because it's an amalgamation of my 2 children's names, Nikki and Michael. And Nickel Home Loans will initially be a mortgage broker, but we will be doing all loans secured by 1 to 4 family residences. Professionally, as I said, I'm an attorney. I also hold professional licenses as a property and casualty insurance broker, a real estate broker, and a notary public. So I've got a fairly detailed background, but my heart really is in mortgage banking. And as a serial entrepreneur, I greatly enjoy building companies.
I like that, serial entrepreneur. I like that a lot. Let me tell. I know I'm not the one here to talk, but I want to get one thing straight with our audience. When things come up and talk about subprime, some of our audience only know subprime from such movies as The Big Short. which I don't think represented us quite that well. I really like, speaking of movies, and that's what I do the first half hour usually. I like Margin Call quite a bit better. But let me tell you, back in the day, in the 80s, 90s, things like that, subprime, and that then we're not allowed to use that word anymore. But subprime was made up of good people. And those were turned out to be, because I did quite a few of those also, not as many as you were with. I was selling to some such people as, believe it or not, Ames Home Loan, and then Countrywide was a lot. But these were people that were so appreciative of the loans they got. They were usually good people that had a problem. They got through their problem. They were working through it. We helped them work through it. We did a great thing. And I think the industry did a great thing. There was a time after the turn of this last century, and I'm not going to get into details because I was there to some degree, and well, you know what happened. And, kind of in the way that reverse mortgages have had a bum rap for 40 years now. Well, for more than 40 years, but that loan program they got the bum rap for, went away in the early 80s. So when people think of subprime or less than perfect credit, it gets a bad rap, and really it shouldn't.
I can't agree with you more, Jay. Back in the day, in C, which became subprime, was built to find credit for people that couldn't obtain credit secured by their home because they had a bad credit history. But they still had plenty of income and equity in their home. And actually, that's something that in the future, I hope Nickel Home Loans will be able to bring to market a new, old product, because there are so many people today that can't get a loan because they have too low a credit score.
I think our whole economy rests on a lot of what you just said being true.
I think a lot of the people that I deal with that I've been, because as I said, I've been doing brokering loans recently, a lot of my applicants are aware that their credit score diminishes if they're late on their payments, if they have collections, if they have a foreclosure or a bankruptcy. But not a lot of borrowers realize that if they have a lot of consumer debt, if they carry a lot of credit card debt, if they have one or two car loans, things like that also diminish their credit score. And they also don't realize that when they have many credit cards upon which they keep balances, sometimes they'll keep a high utilization, which is the amount of the balance on the credit card relative to the credit available, because it's a low interest rate credit card, not realizing that hurts their credit.
Yeah.
Because you want to keep your score as high as possible. You want to try to have as low a utilization as possible.
So spread it out, right?
Spread it out, absolutely.
Yeah. I call it the temptation factor, and it's very important when it comes to credit scores.
And so therefore, if they're trying to take advantage of the equity that they have in their home and they're trying to get a loan, a lot of times that credit score won't help or will keep them from being able to qualify. With the onset of this pandemic, where there were loans available for people with a credit score below 620, it's almost impossible to get a loan now with sub 620 credit score if it's your owner-occupied property. If it's an investment property, then it could be considered a business loan.
Right.
But they're still very expensive. The interest rates on those loans are 7, 8, 9, 10%. But people that get into a credit situation because of life, they have a medical issue, they have a divorce, they have the death of a breadwinner or something like that. And as a result, during that time period, they have late payments or collections or whatever happens. their credit score drops precipitously. And a lot of times the drop in the credit score may simply be because they take on debt. They live on their credit cards or things like that. And now that they're carrying so much consumer debt, they're unable to climb out of that credit hole. And that's why I think that credit scoring, although 90% of the time does very well in predicting what the performance of a borrower will be, there's probably that, and I'm pulling it out of air, but 10% of the time that credit score really unnecessarily and unfairly penalizes great borrowers, as I say, who have great amount of income and a great amount of equity in their property.
Yeah, you can even go back and find a collection that's 4 or 5 years old, pay it off, and that will lower your score, right?
Yep, it's crazy, and a lot of people think that they should close all of their credit cards once they pay them off. And what I tell people is one of the things that they should do, and if they have the liquidity, meaning the cash available to them, is after they've paid off their credit card, still use it modestly, but if you can, pay it off every night. I have experimented with it myself. I've experimented it with my clients. People at the lower end have the greatest movement. I've seen people move 100 points on their credit score, where normally they just paid their credit card before interest came due. But once they started paying off their credit card balance every night, their score went up by more than 100 points. So it's these little things that can really help somebody be able to borrow. But one of the things that, your expertise, Jay, for people that are in that credit bind, if they're fortunate enough to be 62 or older.
Say that again. Fortunate enough to be an old guy, yeah.
Well, because the federal government wants to give them a phenomenal entitlement, which is that reverse mortgage. And I'm on the same page as you. I think that reverse mortgage is a fantastic product, especially if the senior, the person 62 or older, cannot qualify to refinance to take advantage of the forward mortgage low interest rates. But even the interest rates on reverse mortgages are at historical lows right now.
Yeah, they're under 3. So in many, many cases. So now I don't know whether or not you are planning to do, and you don't need to answer this now, because to do reverse mortgages with your new company. But if you do, I want you to feel absolutely welcome back on the show for anything. I have other people on the show that also do reverse mortgages, and I sincerely feel that the shortcoming on reverse mortgages is the education that's out there. So what's good for you is also good for me. And while we're on the subject of you, why don't we take a minute here for you to give your information on how to get a hold of you, etc.
Sure. The company, again, is Nickel Home Loans, Nikkael. Actually, I'm the best way to reach me is you can call our toll-free number, which is 888-715-0001. Or just, I have no problem giving out my cell phone. My direct line to my cell phone is 714-742-3854. And I encourage you to call me or text me, and I'm more than happy to provide free consultation with respect to any questions that somebody might have with respect to any type of mortgage.
Because you are an Esquire, right?
I am a lawyer,
but not only in name. I know for a fact you keep very current.
Thank you. I do. I still have a small practice for some of my best clients that I've kept over the years, but I do remain current. As I say, I have that current license in the state of California. But a lot of times people just have questions. They don't know to whom they could go for just general questions. And that's where I encourage people to reach out to me about how mortgages work.
Yeah.
And which I'm sure you've discussed many times on this show. Reverse mortgages are so misunderstood.
I know.
So many applicants that I've spoken to recently that are 62 or older that have called in or reached out to my website for a refinance on a traditional forward mortgage, that I've brought up and I've said, hey, has anybody spoken to you about a reverse mortgage? I without exaggeration, I would say 90% of the time their reaction is not just negative, but fiercely negative. Oh, no, I don't want a reverse mortgage. It's terrible. So I simply ask, if you don't mind, can I just take 30 seconds?
That's
Can you
good.
tell me what you don't like?
Yeah.
And many times they come up with information or feelings or interpretations that are just outright wrong. Just
Correct.
they don't understand that they still maintain the ownership of their home.
Right.
They don't understand that when they do die and the loan comes due, that their heirs have up to a year to repay that loan.
Right.
They don't understand that their heirs get to keep 100% of the equity, that it works just like any kind of a loan, that when somebody dies and there's property that they own and there's a mortgage on it, that mortgage has to be addressed in order to be able to proceed with the liquidation of that property and moving into it.
Most people just think, well, I've got a Bank of America or Wells Fargo loan, so my kids will just, no problem. It just becomes their loan. Well, it's not quite that simple, is it?
No. And in fact, as I say, just like with a reverse mortgage, when the borrower passes, that loan becomes due and payable. And so it's something that has to be addressed, and a reverse mortgage really is no different. And there's so many benefits with respect to that reverse mortgage, because the borrower, as I'm sure you've said so many times, has the option to make a fully amortizing payment, has the option to make the payment of interest or a portion thereof, or has the option for the rest of their life to never make a mortgage payment ever again. And all they've got to do is be current on their taxes, their property taxes, be current on their homeowner's insurance premium, and maintain the home. And the bar for maintaining the home is pretty low. What I tell people is basically you just have to make sure it doesn't get red tagged, that it remains habitable.
Right.
And that is not something that is fairly difficult to do. And you get to choose, if you want, to never make a mortgage payment for the rest of your life. The missed payments get added to the unpaid principal balance of the loan. But for so many of my borrowers that I've given a reverse mortgage to, I'll have them and provide to them amortization tables to compare what their cash outflow is and the diminishment of their wealth by having a forward mortgage versus how their wealth accrues with a reverse mortgage, where they no longer have the need to make a mortgage payment.
Right. And there's so many instances where you can actually increase your legacy because you have a reverse mortgage. There's way to protect your portfolio, not mine, because mine's just pictures, but other people's. I don't know if you ever saw some of the presentations by Philip Walker from FAR. If not, I can send them to you, but he's really good with financial plan. He's not a financial planner himself, so he's never in competition, but just shows how that worked and how people with the reverse mortgage, usually on these Monte Carlo models, will almost always end up better over a 30-year period than if they had not. And the financial planners make a whole lot more money for their custodial fees. But that's, that's another thing. And as far as the kids are concerned, I have a question for an attorney, but I think it's too much for the time we have left. I think it's pretty true that, and of course you should always, disclaimer-wise here, should always check with someone like John at the time. But if you do pass away and you haven't made payments, either principal or interest, for 30 years, your kids can take advantage, because they're the ones that are going to pay it off. So I think you have to take it out of the trust at that point. But if they're the ones that are paying off the interest, they also get the write-off for all that 30 years of interest, which should make a huge dent in capital gains and things like that. But I think that's a more complicated question than right now. But I do think it's usually true.
Yeah, and that's not so much for an attorney as it is for a CPA, certified public accountant. And I know from the experience that I have, it also comes to whether the reverse mortgage holder has taken any advantage of any of that mortgage credit or mortgage interest payment. So, but if it's never been taken by them, then yes, absolutely, it's available. But go ahead.
No, I was just going to say I have a friend he just moved to Beverly Hills, having some trouble on his condo getting that because he loves the heck'em, but he has very little training in finance. He retired from the World Bank, so the finance part was a joke, but he knows what he's doing, and he loves reverse mortgages. So, he had to pay. He actually went and paid interest for 1 year because he figured between him and his CPA that he would save tax money that particular year only if he did so.
Yeah, because it depends on your tax bracket. When you mentioned that your friend has a condo now, that's another thing that I found that some of my applicants didn't know is that there are people that I've come across that were interested in a reverse mortgage, never got one because their condo was not approved, and is unaware that now you could get a single unit approval, right, which more often than not will be granted. So that these homeowners that are 62 or older can take advantage of this government entitlement, which is really what
absolutely
mortgage is.
And some of the what we call now proprietary loans, we used to call them jumbos because they were only for more expensive homes, but now they kind of cross each other at certain points. Some of them don't need any more approval than just a normal Fannie Freddie approval on the condo. And that really helps. And as far as going way out, they have loan amounts up to $4 million on some of those. And if you want to do something really nice for your legacy, take out the $4 million, like someone did here over near the Ritz-Carlton, and buy your kids a couple of houses.
Yeah, exactly.
Yeah. I tried to get one from him, but he agreed that I looked more like his father than his sons. So.
Yeah, and that's another thing where people don't realize is that you can use a reverse mortgage to purchase a property.
Oh yeah.
Which sometimes when you're sitting on and have some liquidity, you have some cash, but you were unable to invest in a home. That you could use some of that equity or even the equity from the house if you're downsizing right now. Keep that cash and purchase it. Don't use all of the equity from your current home that you sell as you downsize, but use only a portion of it and get a reverse mortgage for the remainder.
Right. Now, I'm going to repeat something to you may be able to use in your new business, because I thought this was brilliant, and you would know how to translate this to a client. But I met with several financial planners a few years ago, and one of them had just retired. He lived in northern San Diego County, and he retired. And when he told his peers, that is, other financial planners, that he was buying his retirement home with a reverse mortgage, they said, "Why on earth would you do anything like that?" And his answer was, "I just paid 30 years worth of rent in advance and still have a call option on the property."
Yeah,
so
you
can explain all that too. Yeah.
So again, there's just so many benefits. And one of the last things, I know we only have a few minutes, and I heard prior to my coming on the show, you were talking about interest rates. whether it's a reverse mortgage or forward mortgages, I do believe that interest rates will remain low for the foreseeable future, 2021 to even 3, because even though people are predicting that interest rates will increase as we come out with a vaccine and the economy starts to improve, I think that there's going to be such a weight dragging the economy that we're going to have some time period. Another thing out there, just for the nerds that might be listening, is that
thank you for listening. I think you're the first one in all these years who actually did that, so thank you.
You're welcome. But for the nerds out there, I believe that we are following the Japanese model, and what I mean by that is, if you look historically at the percentage of gross domestic product, GDP, was attributable to government spending. Today in Japan, it's well over 200%. But if you go back before Japanese interest rates went to zero, like they have here in the United States, there's a similarity between the growth of government spending. And we don't need to discuss the wisdom or lack thereof of the growth in government spending. It is a fact. Today we're hovering around 38%, which is historical highs. And I think that if you make that analogy, that's another reason why interest rates will stay relatively low.
Yes, you know what, you are correct. I put that question mark in my other part to get people to think more and more about reverse mortgages, but they shouldn't need those things. They should be asking themselves these questions all the time, but we don't. You know, some of them, when we talk about life insurance, we don't want to talk about that. When we talk about what if this happens, what if that happens, sometimes you need to, and you just need to be more prepared.
Absolutely. And again, the reason why I mentioned about the rates is, as I'm sure you've mentioned on the show many times, with a reverse mortgage, you do have the option of getting a fixed rate. But when you get a fixed rate, you deny yourself the other unbelievable benefit of having a line of credit that continues to grow as you age. And that's available to you again without ever having to make a payment on that line of credit either. And so that's why when I've talked with some of my borrowers where they're so pre-programmed to fixed rate, if I am correct that interest rates will remain relatively low, there's such benefits to getting that adjustable rate now. And then you could also do, the last reverse mortgage I did just about a month ago was a refinance of a reverse mortgage. So you could get a adjustable reverse mortgage now, and then in the future, if you feel nervous about it, refinance it into a fixed rate.
Yeah, I think if you've had it a few years, you'll probably lose a lot of that nervousness. I haven't had a fixed rate loan since the middle 80s or so, and I'm very happy with it. And we have only 1 minute, but I want to thank you for one more thing you said. You talked about before there were FICO scores. Nobody else seems to remember that, and that makes me feel so old, but you did. And within this minute, go ahead, please. Give out all your contact information.
Sure. Once again, it's Jon, Jon Daurio, Daurio. My company is Nickel Home Loans, Nikkael. My telephone number is 888-715-0001. And I hope to hear from you.
And please call Jon. If you miss his number or whatever, you know where to find it on my site. Call me. I give out my regular phone all the time, and it's maybe because I'm too old to try to keep track of two phones, but I know Jon will answer it for you. So Jon, thank you so much. You've been great, really great. The half hour flew by. Sean, thank you very much. And as Groucho once said, I'm not crazy about reality, but it's still really late to get a decent meal. And remember, Kaplan here on the same corner in front of the cigar store. Take care of yourself. Thank you.
me.